The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Become a Pro course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
So in terms of conducting the proper analysis, just some hypothetical questions that we can run through with some markets, just to give you some real insight into actually looking to trade the markets in such ways. So here we have gold, and the question is, which type of analysis is best for the gold market? Okay, which type of analysis is best for the gold market? So here, what we have is two separate moves. So again, we need to understand the market. We need to ask ourselves the question, well, for the first move here up to the top left, the market is experiencing, a lot of indecision. It's trading a range there, previous to a very strong move to the upside. So some questions, well, what is the term of the trade? What is the current environment? And why is the market trending here like it did below? So there are some questions that we need to ask whether we want to or not, or whether we want to become fundamental traders. That doesn't mean we ignore it, even if we want to trade completely technically. What is happening in the market? So let's try and address some of these issues. Why is the market trending? Well, here we've seen, I believe this is over December time, a very strong trend to the upside as a result of inflation. The inflation caused by Donald Trump and his new tax reforms and how they would affect, I suppose, bouncing or strengthening inflation. Of course, inflation is, not necessarily something in terms of supporting many asset classes, but of course it causes a bit of a bounce here in gold, given that we look to, I suppose, shift our capital into a store of value, a precious metal that can hold value while inflation serves to erode other asset classes. So that caused a very strong bounce here in the gold market to the upside. Now that we are here, so we could have made, of course, this decision on a fundamental basis. We discussed the term of the trade, the current environment with inflation, and that's why the market is trending. Now that we get into a new point of time, we can see that, well, we can't simply ask the same question and have a different answer. Which type of analysis is best for gold? Because, well, the analysis may have shifted, or the market sentiment or environment may have shifted. What we can see with the price action purely on a technical analysis is that would support that theme, that something seems to have settled or shifted here. The market is experiencing a lot of indecision. We can certainly see that from the price action. Again, we break through our lows up and get a rejection from the high again. Several points in time we're effectively trading a range here, okay? So, and a rejection from the high again. So that would lead us to maybe say, well, we're not sure what's happening in the current environment. There's a lot of volatility. Perhaps the best type of analysis to insert in this market is simply technical analysis. We know that it's trading a range. You can see that with the price action. Let's simply look to trade this range now with technical analysis. If we're wrong, we'll take our losers and past this point here and potentially past this point here. Very simple in its approach, but when we have no strong fundamental analysis behind our trade, we can, of course, look for sentimental shifts, sentimental analysis, or simple technical trading. It's down to your own approach in terms of trading these assets. So let's move on to another asset class. What we'll discuss then is, that's the gold market. What we'll discuss then is the S&P 500. And again, the question is another completely hypothetical question. Which type of analysis is best for the S&P 500? At this particular time, what is best? Well, of course, what we can see here is a huge level of very new volatility at a particular point in time. I'll just reference this on our price chart here. This is a particular point in time when clearly sentiment shifts into a sort of downward spiral, and we'll see this really start to shoot to the downside. Now, there's something clearly going on. There is a clear change of risk theme in the market. What is the overall sentiment in the market? Well, it's bearish. Let's not confuse ourselves. This is not a buying opportunity here. This is certainly not. Neither is any one of these opportunities here. And I would argue within the volatility, there are certain questions to buyers speculating in this market. So again, it is completely interchangeable, completely, I suppose, very good to juxtapose against what actually happened previous to this range where the market was trending. Now this question here has been put into light. Why is the market trending? Well, hold on a minute. It's most certainly not trending. We've seen a break of shift. We've seen the risk theme has shifted. Sentiment again. What is the overall risk sentiment? What type of analysis do we do? Well, we're not too sure our fundamental analysis in the short term is correct, given the strength of Facebook, given the strength of the S&P 500 and the American global economy there. Something has significantly changed in the risk theme. What we can do maybe is abandon our fundamental analysis and just react to the price action as it is telling us there's something going on with the markets. So again, total hybrid approach, but that's how I want to get you guys thinking as professional traders, not to just say, well, look, I'm going to approach this market as a completely technical trader. I'm going to ignore sort of what happens if there's really, really strong economic moves out there. I'll just focus in on my technicals, or vice versa, to ignore any one factor. So what we want to sort of develop, of course, as we go through the Become a Pro course, is your ability to assess markets, to conduct proper analysis, to combine all factors that can affect price to give you the better advantage, to give you more of a discipline in your trading approach, and obviously to become a little more experienced and develop a level of expertise will inevitably make you more money over the long term. That's absolutely the case. Again, what we have here is a single stock equity. So we have Microsoft here. Again, why is the value identification so important when trading stocks? Well, one, because we can see that the price action here with this chart is quite hard to trade in terms of the liquidity provided by equity indexes or forex markets. We can see that the market actually gaps a few times. So there is one example where the market just opens here. It doesn't show us any volatility for 5 days, and then it just opens up. So if I was trying to sell this market here, it's dangerous. And this can happen in terms of if our analysis is not totally in sync with how this single stock equity is performing. So to give you one example, corporate earnings, very, very important when not only trading single stock equities, of course, but trading equity indexes or indices. What we had last night was Facebook and Apple earnings that came out very, very strong. And of course, the Nasdaq rallied as a result at 9:15 last night. Let's discuss the chart in front though. We have Microsoft corporate earnings again. What I can use as an example is just to discuss this move here. So let's say we chose to ignore or conduct proper analysis. Well, if we were trading within this period and the corporate earnings report was in this particular day, that could actually provide very strong revenue reports or very strong a level of ownership in terms of what we discussed earlier, whether it's EBITDA or earnings per share. Potentially in Q4 2017, they provided $1.50 earnings per share, and now they're deciding to pay out $3. Well, of course, that's going to be great for investors. People are going to look to flood into Microsoft given the revenue potential for single stock ownership, and that can cause this stock to open up. So we've completely ignored our fundamental analysis that there's serious news concerning Microsoft overnight. Potentially we should not be trading it, and given the risk and our unawareness of such such reports. Again, technical innovation, sector performance, again, a lot of factors that actually can affect something very singular in terms of pricing Microsoft as opposed to pricing a forex pair or an equity index or a commodity. We need to know how Microsoft works. What are the expectations on revenue? How is it evolving in terms of technology? How is the technology sector performing? And of course, we can look at the technical setups as well to say, well, look, this is trading to the upside. If I want to take a short position before a very strong, potentially strong corporate earnings report, is that the best idea? I would argue potentially not. So again, we should start to factor in all of these into our trading ideas. Be aware, be an aware and an astute trader before approaching these markets, and of course you're going to be able to avoid the pitfalls for many trades when markets do move against you. So again, let us focus in our objective. Again, we've discussed sort of going through fundamental, technical, and sentimental analysis in a lot of detail, and of course they have great, I suppose, objectives. They have great advantages and disadvantages. Again, what is our objective as a financial analyst? Again, some might argue, well, we're in the business here of making money. We're in the business of trading these financial markets. But of course, in trying to assess and conduct proper market analysis, well, of course we can call ourselves financial analysts. That's kind of what we do as well. So we need to take that on board and reference what they do in terms of their work. We need to be able to properly disseminate news flow and economic data. We need to assess value, research and gain insight into the markets, and use fundamental analysis to make trading decisions. And again, that's more focused on the fact that we choose not to ignore it completely. Of course, even if we're technical traders and we know that, well, look, there's a decision over Brexit or something tomorrow morning that can move markets or whatever it may be, let's choose not to ignore the obvious in front of us and make responsible trading decisions. So in terms of news flow and economic data, we need to properly disseminate that news and effectively understand what it means for us as traders. Now, the stock market, again, it's representation of the psychology of the entire world at any given moment. Data is an exact thumbprint of that moment, and as traders, we get to know what the world is thinking and feeling and anticipate what it will do next. Okay, so that's a very interesting point to make. Traders are better able to disseminate data and make sense of how economic news will affect the markets, will have a better sense of how the market prices in those risks. Okay, so when we have more information in front of us, when we have a better idea of what that information means, and then when we look at our trade screens and see the market move in one particular way, we have a better sense of how the market prices in those risks. Does that all make sense? Okay, so that's how we look to astutely process information and react to what the market is doing. It is important to understand how the markets react when new data is released. The frequency of short, volatile reaction to new data is commonplace before the market begins to disseminate the data and price in what it actually means. Okay, so there is volatility in doing this, and of course you'll see traders get it wrong all the time. I'm proud to say I'm one of those traders that gets many of my decision wrongs as well, but that's part of it. Looking at price action, looking at news flow, of course, what I would argue is give it time, give a few moments for the market to price in that news, particularly if you're a more focused long-term or medium-term trader, as opposed to just trading the volatility, before seeing how the market prices in the news to get your trade off. And that can lead to, of course, a better level of trading accuracy. So it's key in terms of proper dissemination of news and economic data. Assessing value is another objective of ours, not only as a financial analyst, but as a trader. The primary objective of financial analysts is to properly assess value. However, it is more focused on investing rather than speculative trading, which I would agree, of course. If research leads an analyst to believe an asset is mispriced, then they can deliberate trading and investment decisions completely based on perceived value. And that is, of course, one approach that is so crucial to fundamental analysis in terms of assessing value. I believe one of the examples we talked through in some detail there previous there was the aforementioned discounted cash flows. That's effectively the income value of a stock. So over a 2 or 3 or 4 or 5 year period, we will look to understand the time value of money, to understand how the money is best spent in certain investments across the lifespan of that stock, to see what the perceived revenue based on those future cash flows may present. And actually that presents value to pricing in the stock now. So it's all an assessment of value. So again, some very interesting question to ask, just in terms, we can sit back now. I know we've taken in quite a bit. You can sit back now and ask us a few very interesting questions, just as traders, as financial analysts, to assess, well, how do markets move, or how do we think about things as traders? So why is Facebook Inc. valued at $190 billion? Okay, did we ever think about that? What is the value behind? Surely that can't be true, is it? $190 billion. So there is a reason for that. Is there value there? Is there more growth there? How is Facebook so dominant? What sector is it in? How is that actually supporting the S&P? So many different questions, very interesting stuff. How will the price of wheat be affected by a dry summer? Okay, so first thing that springs to my mind is, well, what are the biggest wheat markets, the biggest exporters of wheat? Of course, the US, actually Russia and Ukraine would be one as well. And France is, of course, a very large exporter of wheat. So if they have dry summers, well, what's that going to do to the commodity price? How can I make money and profit off that? Whether it's a long-term trade or a short-term price burst, given if I see some technical analysis or a breakout trade, I want to be involved in that trade. Why is the natural gas price falling in February? So do we ever think, why you generally see a rise in the price of natural gas, specifically there in the US and Europe, over the months of November, December, January? Then we see a tip around January, February, and then we see a very strong sort of downtrend consistently over those end of February, March periods. Well, of course, we know that there's a certain season for demand for natural gas. One reason would be, of course, heating of homes, creating large demand in colder countries and the large colder states in the US. There's a large demand for natural gas, and then we see that price start to dissipate. So we can assess these trades, we can ask interesting questions, we can get involved in assessing value and obviously trade as a result. So it provides us with market insight. In developing a deep understanding of the many factors that can affect one particular asset, financial analysts can gain a level of expertise and market insight into exactly what will cause that asset to move. Market insight will also prevent many poor decisions being made, as a greater understanding of exactly why the market is repricing itself prevents any notional ideas of value trades as well. Okay, so let's say we understand a market in question, again, the natural gas market. If we understand that it's likely fundamentally, given the demand lacks in the months of March and May, of course, will we be trying to buy the top of that market for a long-term trade? I would argue not. We would need to be more careful because our knowledge tells us so, and we don't assess it as a value trade. We look at the price section. Let's get involved in a potential sell. So it provides us with market insight. And certainly, I know from a personal point of view, I know some fantastic traders that actually specialize in some various few markets. So they'll only trade gold, and they'll only trade oil and one equity index that they perhaps have had experience in. So they have a level of insight and are very effective in doing so. Let's develop some insight into the coffee market here, again, just discussing the coffee market in Brazil. Okay, so the world's largest coffee producing countries there, 2017, we can see that Brazil was leading the way, most certainly leading the way with 51,500 kilograms bags of coffee. Okay, so that's a huge ratio compared to the second producer, Vietnam, of coffee. Obviously, that leads into the commodity. Look, this is not local trading. This is a commodity that we can trade on the futures exchange. We can trade it on many MT4 trading platforms as well. This is something we can profit in. So did we know, first of all, Brazil is a huge exporter of coffee and producer? What would happen then in terms of, well, two scenarios. Let's say we can look to the chart to the right to say, okay, well, in terms of exports by Brazil, it's 8% of total exports from Brazil. So if there's going to be uncertainty in Brazil in terms of, economic uncertainty or political uncertainty, I know Rousseff, the prime minister there, was ousted there with the Petrobras scandal there, maybe this time last year. That would have caused concern for me as a coffee trader. Of course, if I know there's going to be some weather seasonality that may afflict poor grade coffee over the long term in Brazil, well, I want to be aware of that, and I want to know how the price is going to move. So look, we're just trying to always develop market insight into trading the markets that we're able to trade and move. And the more experience we have with fundamental analysis, with a technical assumption of price action, and with market insight, then the better we can position towards these markets. Again, we can look toward fundamental trading. Again, the oil market is a great example to choose. And again, we have something a bit more humorous there with a comic sketch there with OPEC discussing their market share and these fracking Americans, quote unquote, actually looking to divest in the oil sector in the United States. Obviously, their process of fracking increased the supply of oil astronomically, and that caused a major downtrend in the price of oil. So what we've seen fundamentally was a supply shift, a large supply shift, or what we call a contraction of supply in terms of, or sorry, an expansion of supply, creating a very, very large shift in demand as well. So when you've seen the market completely open up, we were overproducing oil there in the United States and it flooded into global markets. And of course, now we start to see sentiment with OPEC and other contributors to this market share starting to worry and starting to reprice assets. It caused a very large downtrend in oil. So that's something, again, we can look to our fundamental analysis and say, I'm looking at this chart, it's trading very strongly to the downside. What is happening in this market? Let's do some fundamental research and see if we can pick a long-term trade or a medium-term trade in this market. So again, what we've effectively seen in the oil market is long-term price declines over several periods. Just in the middle here, over a very short period of 4 or 5 months, effectively we've seen prices come from $50 a barrel the whole way to lows of 26, sort of $26, 26.90. There is our last negotiable price there on oil. So a huge move that we can again get involved in. So that brings us to really just outlining, our objectives as a trader. So we know that we also have to take into account our effective market analysis, the schools of thought, a hybrid approach potentially, fundamental analysis, or technical skills. We need to know that, well, we need market insight. We need to develop our own professional approaches to analyzing these markets and conducting proper analysis, just like the financial analyst does. What are our single objectives as financial traders? Well, of course, to profit from price speculation. If we weren't involved in price speculation or profit, we wouldn't be doing this. Of course, we're there for the money. Take advantage of news flow and volatility, again, without knowing essentially what happens in the news flow all the time. We know sometimes we open up a chart and we can simply see a market spike to the downside and come back up, and that is a volatility that can provide short-term trading for us and with the news flow. To protect capital when alternative interest rates provide no return. And that's a very honest example of why many of us get into retail trading or professional trading. And I'll talk through that in some detail. And practical education of financial markets. Okay, so education again is key. We want to not only profit, but we want to know when there are times that interest rates are providing no return. Are there other opportunities for us as people here to make some money when there's recessionary periods across Europe? Unemployment is potentially high. Can we look for profit or for some income somewhere else? So no matter, we have a price speculation, of course, as our first objective here. No matter the reason for the trade, the best trading opportunities are ones that will provide the highest probability of reward with the least amount of risk. So it's very obvious, again, just to state that there as we come towards our objectives here as financial traders. Whether we have different ideas about the markets or what type of analysis we'd like to use, that's a key point. That is our objective as traders, okay? No matter the reason for the trade, the best trading opportunities are the ones that will provide the highest probability of reward with the least amount of risk. So we have Facebook again, we can see the volatility in there. There's some great trading opportunities moving up and down, but again, we're looking to mitigate risk. We're looking to make as much profit when times of profit occur. So that's a key objective. Again, price speculation is, it's an educational pursuit as well. Technical analysis allows us the attribute to actually study price action and to involve ourselves here. So we have very simple technical analysis with, some daily volume, a relative strength indicator, Fibonacci retracement. Again, look, we will discuss a lot of this through our technical analysis lessons within the Become a Pro course, but that is our objective, to speculate on price, to literally involve ourselves when these are moving, these markets, financial asset classes, oil, sugar, wheat, equity indices, when they're moving 200 pips a day, and you're seeing the TV Bloomberg report, well, the S&P is up 300 points today. Why aren't we able to profit in that? The answer is what we are. So that's our objective as traders, to get involved, of course. And again, to simply study price action again. So what we see from the previous slide is, look, how do we trade? How do we trade this price action? What do we do? I mean, do we need to learn the skills, of course, to become better decision makers? It takes time and it's an ongoing task. And that's effectively how we implement something like this. We can see different skills to actually look to capture movements in these markets. And again, the importance of news flow. I'm sure many of us that are interested in financial markets listen to the news. We hear news from maybe CEOs. Jamie Dimon there is this, the CEO of JP Morgan and Chase. Of course, we have Mario Draghi, ECB president. These guys are discussing market movement, and they know how to get involved, and obviously they have their own role, but how can we potentially get involved in news flow to react to what's happening in the world? So I have just one example here, and it's from, of course, ECB President Mario Draghi. So just as a little test there, I would like to just sort of advise everyone to sit back and take this in, and we can try and properly disseminate this news flow together. Okay, so just a quote unquote here from Mario Draghi from his press conference there last. Incoming information, including our staff projections, confirms the strong and broad-based growth momentum in the euro area economy, which is projected to expand in the near term and somewhat faster pace than previously expected. This outlook for growth confirms our confidence that inflation will converge towards our inflation aim of below but close to 2% over the medium term. So when I hear this already from Mario Draghi, we're trying to disseminate proper news flow, faster pace than previously expected. So with some sort of projected growth faster than expected. Obviously, news and markets move in accordance to expectations versus the real news flow. So we have broad-based growth momentum. It's faster than expected. We have more projections on growth. We know that inflation or deflation is a concern for the Eurozone economy, but it's starting to converge close to within a medium term to 2%. So finally, those inflation expectations are starting to dissipate. So we can ask ourselves some questions, how do equity markets react to growth expectations? Well, of course, that's good news. Let's get involved in the equity trade. How does gold react to the inflation story? And again, I believe I had the gold chart there previous, where gold is obviously very, very reactive to inflation because it's a store of wealth. Inflation is very bad for other assets, of course, as it erodes the time value of that money. So if we invest in a bond that provides perhaps, let's say the bond is 1 year, the coupon is 1 year annually on the bond, but inflation is effectively 2% on the year. Effectively, we're not making any money on that bond. We're effectively at -1% over the duration of the bond there. So we need to know how the bond markets, how gold, what does this mean for the markets? How do we trade? How do we get involved? How do we position ourselves as financial analysts, as traders, to really profit in these markets? So that's, of course, one of our primary objectives. Capital protection, of course, is of key importance. So I have just a table here that I'll walk you through, because this is something that is coming to light more prevalently, discussing, many of the students that I've talked through my teachings here, Forex.Academy, through their concern that they want to get involved more with trading and make consistent returns. This is the feedback that we get from many traders in this environment, which is a very just cause. It's a very just cause in my respect here. So what we have here is effectively the economy that we're living in right now, certainly across the Eurozone. Here, we know that central bank interest rates are more or less, well, in the ECB, of course, we're at 0.0 at our central bank interest rate. So that filters through the banking system. Effectively, if you do recall there, and depending on your age, of course, we were able to deliver, as the banks, of course, were able to deliver a rate of return for our own capital. So if we had some money deposited in an account, we were actually getting some interest on that. And that encouraged people to save money. Now, that's not the case now. So the interest rate is at 0%, giving us no return on our capital. So this is our hypothetical saving account here, the capital savings account with Bank A. Okay, we decide to save up some money, and we are starting the saving account here with from year one at 100,000 euros. Okay, now because that's effectively offering no interest on the capital, we know that inflation effectively is at 2%. And that's certainly the central bank target as well. So effectively, the erosion of our wealth over that time is a compounding 2% per year. So within year one, it's 2%. Within our 98,000, of course, from year one to year two, it's 1,900, 1,920, 1,882, and 1,844. So effectively, what that leaves us in 1, 2, 3, 4, 5, year six here is this sum here. So this is year six. So we've saved up 100,000 at an interest rate of 0 over a long period. Effectively, inflation has eroded our value of our hard-earned capital to 90,000. Effectively, we've lost out on this store of our capital in a bank, with inflation at 90,000, so 10,000. So, of course, as opportunistic human beings, we need to look for return here. We need to get involved in something that protects our capital, but hopefully delivers more of a return. So on a total hypothetical discussion, again, this is the feedback we're getting from many traders to actually look to involve themselves in a pursuit like financial trading. So these profit targets, again, are very, very mild in terms of trading and investing. So very, very mild. But let's say we have 4%, 6%, 12%. We have a down month for some reason there in month, year 1, 2, 3, 4. And then 5 here, we have, of course, 6% return. Now, not adjusted for inflation, but effectively the value then of our 100,000, given that we're trading, is 128 compounded again. So just a hypothetical example to see why we would look to preserve our capital. Again, the difference in that is not 28,258. It's actually just under 30,000, given the rate of inflation on eroding our value, of course, roughly around minus 10,000 there. So it is, of course, a very, very common pursuit that many traders are getting involved. They want to learn more. They want to learn how to protect their capital against inflation. They want to deliver a return themselves, because something that was once restricted for the investment community, for Wall Street, is not anymore. We can trade the price of oil, sugar, equity indices, forex markets, and make profit over the long run and the short run. So look, that's a very, very honest goal, and something I would focus on in terms of trying to define our objectives as financial traders as well. And of course, last but not least, practical education. So it's a very, very knowledgeable pursuit. Practical education is the best method to develop a consistent, well-formulated trading strategy, which is, of course, the end result for a financial trader. Successful traders have a hunger for market knowledge and will continue to learn as they approach trading the market each and every day. This is a hard realization for some people to accept, but is a must in developing professional trading attitude. Okay, so that's a professional trading attitude that we're looking to develop, of course. And again, understanding the market you trade. So that is effectively what we're focused on. We want to leave you with this note: just understanding the markets that we trade. In order then for market analysis to be effective, traders should understand absolutely the trade position they are taking on. Okay, those that trade the markets on a completely discretionary basis will be at a real disadvantage if they do not understand what factors have an influence on the markets they trade. Technical analysts who choose to ignore this must have a complete knowledge of the technical tools, skills needed for price analysis, must be able to implement them with complete objectivity and discipline. So that just brings us back to the very start of the webinar again. Whether we're deciding to do fundamental trading, fundamental analysis, technical analysis, there is advantages to both, of course. If you choose to ignore one, you must have a certain level of skill or understanding about those markets, and vice versa for your fundamental trading. You must, of course, always have complete objectivity and discipline with your trading. So that is the only way we'll be able to conduct effective market analysis. Okay, So that brings us to the end of this Become a Pro webinar 3. We'll run through the lesson summary here. What did we learn, of course, through this lesson? Well, look, we've really established here the ability to effectively analyze the markets we trade will lead to overall success or favor. Okay, is anyone concerned about that point? Does everyone believe that is certainly the case? The ability to effectively analyze the markets we trade will lead to overall success or failure. Of course, it's going to be so proficient as we move forward as traders. Both technical and fundamental analysis will contribute to better decision making. Of course, that is certainly the case. And market insight will provide a trading edge. No matter what market we decide to trade, of course, or what type of analysis, if we have expertise or insight into that market, we will develop a trading edge. Okay, so that brings us to the end, of course, of webinar 3 here, effective market analysis. I hope you really enjoyed that. That's fine. Look, at the same time tomorrow, we'll address webinar 4. I look forward to that, of course, and addressing any of your questions as we go through the Become a Pro course. It is, of course, a very interactive course, so do make available, of course, the opportunity to really get involved and access this learning potential, of course, with questions as well. So if that's all, then what I'd like to do now is just thank you very much for your participation. We'll see you next time here at Forex Academy. All the best then. Bye for now.